RoyalBluFX. In today's video, we're going to talk about risk management. We're going to actually talk about it in very simple terms. I'm not going to go into so much detail about it because there's a lot more to be said and talked about risk management, obviously. But the stuff that I'm about to talk to you about, you can use it, obviously. You can utilize it in your strategy, and let me know what you guys think. All right, so without any further ado, let's begin. So first things first, we're going to talk about risk, and then we're going to talk about taking profits. Okay, so the first thing is, let's just say we're in a bullish market like this, right? What I typically do is whenever I wait for price to retrace back to my demand or supply zone, in this case my demand zone, right? I normally highlight the last bullish move, so something like this. Actually, let me just delete this, for example. Let me just do this. Something like this, right? Price comes down, like that, and then price runs. Okay, so when price gets back to our demand zone, I normally just highlight the last bullish or bearish move. And so in this case, since we're looking to target the demand zone, the last move was the bearish move down here, okay? And the last bearish move can consist of many candles, multiple candles, right? Notice that I'm not just marking out just an order block or one, candle inside the main high and the main low. I'm actually highlighting the main high and main low, not just an order block, right? So this will give you sort of the perception of not thinking about where to look for an order block exactly, but it's more of like the area, right? You're not actually looking to target an order block because there are a lot of conceptions and misconceptions that price comes to an order block, and sometimes you get tapped and sometimes you don't get tapped into an order block, right? So in this case, what I'm trying to do is really just give my zone a broader area where price can come into, and then I can then enter from that part of the zone, okay? So let's just picture this, right? This is what happens. So once price gets back into my demand zone, what I do is I use the Fibonacci level. Well, it's not really Fibonacci level, but it's the Fibonacci tool. So I go from the high to the low, right? And you can obviously use, I'm pretty sure this tool here, right, has the 50 EQ. There you go, the middle line, right? So you can use that just as well, just like that. For some reason, I'm used to using the fibs, and I like using the fibs a lot, right? Okay, so once you do that, right, and you go from the high to the low, right, my main objective is to wait for price to get to the 50 EQ, which is right here, right? And the reason for that is because there's many times price comes into the 50 EQ for majority of the reasons, because price tends to there's a lot of buyers at the 50 EQ, right? Now that's not to say that there's a lot of buyers here as well at the open of the zone or the top of the zone, right? My rules are here to not buy or sell at the very top of the zone, the very surface of the zone, right? And the reason for that is because these are considered to be a break and retest traders. The break and retest traders, retail traders, sort of something like this. You can see right here, right? So when price runs the high, right, price comes at that break and retest area, and people tend to generally buy from there, right? Now, the reason why, again, I don't buy there is because that is a break and retest strategy. What I typically do is I wait for price to get to the 50, right? And then once price taps the 50, price then runs the opposite way, just like this, right? Now, a few things to think about is there is another situation that can happen. Price can also come inside the zone, just like this. It can come inside the zone and then also push the other way, right? Just like this. There's no one way, correct way to do this, but the biggest overall concept that you need to understand here is that price is mitigating. There's a mitigation process and there's an inducement process. So when price gets to the open of the zone like that, this is considered to be a inducement, okay? And this hence why a lot of traders buy at the break and retest, right? So you would see something like that. I would probably do this right there, inducement, right? So that's my inducement right there. And I don't typically look to buy when price gets here at the inducement area, although there's no one. I'm not going to say this, but I'm not going to say that there's no one way right to do about it, because normally I follow my entries, my entry criteria when price actually reaches the when price reaches the why didn't that something happen here? When price reaches the 50, and that's what I typically look for, is to enter off of the 50, right? Obviously, you can play around with it and say to yourself, okay, well, if price doesn't reach the 50, right, and it only reaches the the inner part of the zone right here, and then goes off, this is very still much doable, right? That price can do this as well. This is obviously on your own back testing, right? But generally speaking, I like to enter at the 50. Now, why do I like entering at the 50? That's because knowing with the back testing that I've done is that a lot of times when I used to enter at the open of the zone, and then I would put my risk right below here, right? So it would look something like this, where I would enter like this, target the high, right, and risk this whole 1 entire percent, right? Now, you can risk a whole 1 entire percent if you'd like, but I like to minimize risk. Minimize risking is the key to trading, right? You want to lose less, but win more, right? So this to me is risking everything, a lot more than, not everything, but it's risking more than I would like to, right? And then typically when people buy here, right, price does this, then comes against you, now you're in drawdown, right? Now you're in the gray area, right? And then when you get down here, you're now in the dark area, right? You don't know whether you should hold price or not, right? And technically, again, through my back testing, price does come below this low normally to sweep more liquidity, right? And then price runs the other way. I'm pretty sure you guys have experienced this a lot, right? So my theory and strategy is to enter at the 50 and risk just this much, at least half or a little bit more, maybe about 75%, maybe not the whole 1%, excuse me, but maybe like 0.75% of the total 1% here, right? So I would put my stop loss right below the zone here. The reason for that is because I'm being very on the defensive side here. I understand that price comes here a lot, right? About 50% or 70% of the time it comes to the 50, and then price extends, right? And sometimes when this happens, when price goes at the 50 like this, right, price will sometimes come and wick you out like this and then continue, you see. So this is sort of that theory. This is the theory, the way I look at things, right? Now, the reason why, again, I go below the zone is so that I don't have to have the market take me out or take out my stop loss, right? That's obvious. That's the obvious in this theory, right? But a lot of people, again, what they tend to do is just enter from the top of the zone, right? And then maybe they'll just do this, right? They'll do something like this. They enter, right? Now they're in really a big drawdown here, right? Price continues, sweeps them out, right? And now their stop losses are swept, and then price continues the other way around. And then they're like, oh, well, the market just took me out, right? But a lot of times, like I said, when you enter at the 50, right here, is when price, you have more of a leeway right here, right? You have more room to breathe, right? Sometimes price doesn't actually come down at the low of the zone here. It just starts running, right? And therefore, I've just reduced so much risk, right? I've gotten to where price is at the lowest of the lows, and then I'll be able to take price to swing the other way around fast, right? And so this is my sort of risk to reward, or my edge, let's just say, to risk to reward, right? Now, another tool I can use, and I've used before, is this right over here, which I'm about to show you guys. Where is it? Right here. Okay, I do this. Instead of entering at the 50, you can also do this, which is a nice tool as well. This is these levels are the 0.25. So if you guys want, you guys
Something went wrong.
Oops.
Please try again.
That was my Siri. Weird. If you go here, right to the top left corner, you'll find it, which is right here. It's called the GAN box, and then you can just copy the settings if you want. There's a 0, the 1, and the 0.25, and the 0.75 level. Okay, so once you get to this, right, what a lot of the times when price, if you aren't so sure, sometimes, like I mentioned, sometimes price doesn't come at the 50, right, but it comes at in this area here. Let me actually just draw this more visibly so you guys can see this. Or actually, let me just activate the 50 right there. Okay, that green line represents the 50, right? So, like I mentioned, sometimes price doesn't get at the 50, it just comes in the zone and then continues, just like this, right? Then you miss your trade, right? And this is why one of the ways that this tool can help you, you need to wait for price to come into the 25%, right? And then enter, and then maybe just risk this much, right? For prices to just run back the other way around, just like that, right? Because this happens a lot of the time as well, right? Obviously, you need to do your due diligence and look and backtest this, but this is a great way to also, you know, look to use a tool like this to sort of minimize the risk that you're taking, right? And to gain more profit than actually being in drawdown. And then sometimes, right, price gets below that 50, like I mentioned, and then swings the other way around, right? So that's what risk is to me. Risk is all about making sure that I decrease all the risk and be less into drawdown, and then being more into and then cutting off the trade, obviously, as soon as I can before price actually takes me out. Okay, so that's that. That's with the risk. Now let's talk about profit here. Okay, so in profits, it's very counterintuitive. When I enter and I target, say, let's just say a supply. Let's say we're in a demand zone again, right? Something like this. And let's just say, let me just take this off. Let me just say price was actually bearish at the time. Something like this. Okay, so we're seeing a low. This low never broke the high. We're seeing that price actually is still bullish nonetheless. It's something like this. Okay, prices are bullish, but you see price kind of sort of going sideways, right? We see that this low didn't break the high, and we also see this high didn't break the low, which means this would be the area for entries. Once price gets here, right, and I enter at the 50, I typically target the next supply zone. Let's see, something like this. Okay, something like that. I would typically target the next supply zone here. And the big reason for that is because, and it can be any supply zone really, it doesn't have to be just this supply zone. Let me get rid of that. Okay. Now, a lot of traders are taught to target, say, you know, the main high, right? But let's just talk about this high first, okay? A lot of traders, when people put their supply zones like this, right, they normally like to target the high like this. They're saying, okay, well, that's the next high, so I should be targeting this high, right? And when price gets there, right, taps the zone, and then price just continues. And you're thinking to yourself, oh my gosh, I was targeting this high, but price stopped here and price reversed, right? Well, this is my strategy. Whenever I target a high or low, I normally target the outer part of the zone, right here. I don't target the middle, the 50 EQ, right there. I don't target the 50 EQ. I don't target the high of the zone right there, okay, or the top of that high right there. I don't do that because there's no guarantee. Remember, if you think about it, whenever you're entering price, a lot of entries happen here, right, which are the break and retest traders, right? Price comes in here, right, and then it can continue like this, right? It can do just that, and this would be the inducement, right? However, there are sometimes when price taps this outer part of the zone, right? Does this, right? Then the suppliers or the break and retest traders are wiped out. You know, their stop loss are wiped. Price does tap the 50, right? And then maybe continue bullish or whatever. But the whole point of this here, the whole theory here is behind this is not to be greedy, right? It's to just target something more realistic get in and get out, right? You don't want to be playing with the market. You don't want to think about, oh, you know, let me just hold it to the 50 and then because I know price is going to get to the 50. Well, I'll tell you this honestly, we don't know if price is going to get to the 50, right? But we know it comes there more chances than not, right? Hence as to why right here on the buy, I'm more defensive, right? So I want to play the defense here, right? But I also want to play the offensive side here, which is when price taps the 50, I know at minimum where I need to be targeting. I need to be more realistic about where the target should be, not where I think it's going to go, right here or at the 50 or at the high of the zone, or let alone at the main high right there, right? Because now this is wishful thinking. Okay, wishful thinking is hitting your head and you're thinking to yourself, you know, or I've been taught, hey, you know, as soon as you buy at a low, just target the main high or the, you know, major high or whatever in this case, right? So again, I only target the outer part of the zone because this is the most safest and more realistic area to target, right? And this is why I don't have to lose as much as others would probably on, you know, whenever they're trading, right? But obviously, this has come to a lot of practice, you know, a lot of back testing that I've done, you know, and this to me has helped me to actually achieve the, you know, my risk to reward strategy. All right, so let's look at the live chart on the examples that I was talking to you guys about. So over here, you guys can see that there's your sell to buy here. This is your demand zone, right? Notice how I mark out this entire zone, right? I don't just come in here and say, okay, well, this is my order block right here, right? And I don't go in here thinking, okay, well, this is maybe my order block here, right? Right there, right? I mark out the whole entire zone, okay? And then what I do is I use the 50, or the Fibonacci tool, just like that, right? And I'll talk about sort of targets whenever I get to that. But right now, let's just use this, right? So you guys can see what I'm talking about. So if I was to look to enter here aggressively from this low to this high, right? If I was just here looking to enter aggressively, which would be something like this, I would look at the 50 here, right? Do that and risk below, right? Put my risk tool. Put my risk right below here, and then look to target the high, right? Now, technically, I should be targeting the high, but in more realistic sense, I need to target the next high here, which is right here. This is the next supply, right? And the reason for that is because we haven't actually broken this supply zone, right? Because there's a greater chance, right, the price could just tap here and continue bearish like this, right? So in all honesty, if I was to enter from there, I would look to target this. This would be a 2.2%, right? I mean, you can obviously control your risk here, obviously, depending on what you want. You know, for all good measures, maybe you can just target that low right here, right, which would be 2.5%, okay? So I could target this at minimum, let's target this. And then I could look to, now watch this. I want to actually it'll be even less than that. Let's go here, something like that, right? Now, obviously, I don't enter like this aggressive. I'm just showing you guys if this was my entry chart. We're on a 30-minute, so I would never look to enter the way you're seeing right now. But realistically, there are a lot of people that do this too, obviously. This is just showing you if I was on the entry time frame, right? I would be able to enter like this aggressive. So let me just back this up a bit. There we go. Okay, so let's look at when price is going bearish, because clearly we're looking for price to go bearish here. Price is still going bearish. You can see where price, let me zoom in here, right in here. Notice how this move here, this buy, there were buyers that came in right before price tapped the zone, right? This is where that inducement, the open of the zone, right, at the very surface of the zone where price comes into, which are the break and retest traders, right? So if I zoom out, right, what do you call this? Break and retest, right? Traders are waiting to buy there, right? And some of them, or whatever, have bought a lot earlier on, right? So this is an inducement, right? Then you see price coming in here in the zone, right? Notice how it's surfacing, it's floating inside the zone. It's not at the 50, but it's in the zone, right? Price goes up, right? Retests, or not retests, excuse me, mitigates this area. This is a breaker block, right? Price continues bearish. And then this is where we would look to enter right here. Now, just to be clear, let's pretend all this was not here, right? Let me just get out of this. Oops. Why is it not hiding? Hide drawings. Okay, let's pretend all that wasn't there, right? If you're looking at this, prices are still bearish. Everything is bearish about this, right? You can see that. Right over here, we have a low that didn't break the high. That's considered to be our flip right here. So we would extend that to the left, to the right, right? And this is where we would enter aggressive, right? Let me toggle back on the drawings right here, right? And notice what I did here from this low to this high, right? Right there. I use that Fibonacci tool, right? There's my 50 right there, that 50 EQ. Notice where price comes into, right? And then continues bearish, right? Now, I want you guys to see this right over here. When price broke out of this low here, look what happened. Price came and retested, right? There are those break and retest traders. These guys become inducement, right? And then there's a form of liquidity, right? Your relative highs. Price comes and takes out those, right? Mitigates this area, this order block, right? Or whatever, this the supply zone, right? I go into 50 like this, right? And enter. Now, normally I would have my risk just even higher. So it wouldn't just be like this, but it would be even higher right there. Just above, just so we can avoid this, the stop loss, right? For the markets to avoid from taking out my stop loss, right? And it would be right above here, just like that. So once that has been intact, right, the trade has been intact, oops, let's get rid of this, then I would target this area here. Now, notice here, I'm targeting this zone here. Let me get rid of this big zone. If I can get rid of this big zone here, so we can see this more better. There we go. And let's go down to, oh, something just happened. Excuse me, guys. Let me see if my data's here. Something just happened. Just everything disappeared. Something happened. Oh well. Okay, this is weird. Okay, so we're back. That was weird. Okay, so let's go zoom in here, right? And what we're going to do is we're going to target this demand zone right here. Now notice how I'm targeting the upper part of the zone, not the inner part, right? So I can take my fib and split this in half. And I want you to see what's going to happen, right? So when I play this, okay, right there, right? Boom. Watch this. Boom. That's where my TP is. I'm not trying to go into the 50 because there's no guarantee that price is going to come inside the zone or at the 50. So this is being very, very realistic. I entered from the supply, right, at the 50, targeted the outer part of the zone, right, not the inner part. And that's it, right? So let's see what happens from here. Now notice how I'm actually entering. This is the 50 on the large time frame. Look at this. If I zoom out, right, you can see that's the outer part of the zone. That's the 50. That's the lower part of the zone, right? Okay, but let's go back in here. Notice now this would be my entry right here, right? Look at that. It's no coincidence that price is running up from the 50, right? It's doing it because there's so many traders at the 50. Here, this is inducement, right? Right here, this is inducement. This is also another form of inducement, right? This is why I keep strict rules based around my risk management, is to enter at the 50 so I don't get a void, so price doesn't come against me, right, that I'm into profit right away, right? So let's continue here, right? We're going to monitor when price is going bullish here, right? So boom, let's go there. Let's continue. Let's see how price reacts to when price gets to this zone right there. Boom. So now realistically, this would be my next target, right? But let's just say if I had confirmation, actually I see my confirmation right in there. Let me zoom in here to minimize this. I see my confirmation there. There's my sell to buy. So this would be my entry right there, okay? Because we had more supply here, supply, and then it was a sell to buy. So this would be my entry right there. And the risk would be running right below here, right? Just like that. And then I would target this at this high right there. Realistically, that's what it would look like, right? But let's just say again, you know, I was doing this on an aggressive entry right there, right? So this would be a 1.8% for those of you that are okay with that, right? Realistically, I could also take partials and let the rest run, right? There's no denying that. You can take partials, obviously, and seeing price going bullish from here. Now, what I like doing here is making sure that that the supply zone doesn't hold here. In theory, all supply has to fail. So we can wait for price. We can start monitoring price here, right? This is part of risk management, right? Notice how here we have a rejection right there. You just zoom out here. Look what happened. Who are these guys? The break and retest, right? Price runs the low, breaks this low, comes down, retests, right? So it takes out all the break and retest traders. So realistically, there would have been another entry right there because we have supply came in, demand come up, right? That's my other entry. Now, you know, we can go into another video from this, obviously. You guys probably thinking, well, why didn't you enter here? Why don't you sell from here? Because that's your next supply, right? Well, you know, in the short of it, right, we're in the discount. That's our premium. This is the discount. This is our major low, major high here. That means this is demand. This means we are in the discount to looking for buys. So in theory, all supply over here has to fail, right? So yeah, just like this, guys, right? You can hold it, right, and then hit your next TP, just like that, right? Now, obviously, I actually didn't even know this was going to happen. I was on replay mode the whole time, right over here. So this is what you're looking at realistically, right? So you would manage your trade based on this sell to buy in here, right? If price hit this target, you could have had at minimum your 1.8, right? Or maybe take partials and then maybe take the rest at the high here. I could also look to target this supply zone right here, just like this. Notice again, I'm not just looking for an order block in here. I'm looking to target this buy to sell, right? So realistically, again, I could have just targeted this zone and be good with that, right? Because you never know when price is just going to start reversing against you, right? But do your due diligence to, you know, manage your trade. This candle went right through, so we would have been able to take all this, right, and then be done. I couldn't care for any extra pips over here, right? This is all in the sake of being very conservative and protecting your capital, being realistic against being non-realistic, right? So I hope you guys understood what I was talking about in this video. If you like this video, please leave a comment below and let me know what you guys think. Until then, guys, please subscribe if you haven't already. I will see you guys in the next video.